Welcome to the Ellis Martin Report. During this broadcast, you will learn of potential investment opportunities involving publicly traded companies. These companies have paid us for exposure on this program. We ask that before you consider any possible investment choice, do your own research. You can begin the research process by visiting our website, ellismartinreport.com. Remember, if you do invest in any publicly traded concern, you do so at your own risk. Here's the host of the Ellis Martin Report, Ellis Martin.
In today's edition of the Ellis Martin Report, you'll hear several interviews from my short trip to San Francisco for the Cambridge House Silver Summit and Resource Investment Conference. I spoke with the silver guru, David Morgan of TheMorganReport.com. David Morgan is a world-renowned expert on precious metals, mining, and of course, money. He's seen on the Fox Business Channel, CNBC, and many other media venues, as well as being a frequent guest of the Ellis Martin Report. About a year ago on the program, David, you had mentioned to me that basically we're at war with Russia. And I think we were talking basically as far as economic and financial issues were concerned with currency and what have you. But I think maybe we're sort of leaning toward the eventuality that there was going to be somewhat of a war between the East and West. How do you feel about that today, given current news?
I appreciate the wrap-up, and I'll agree. What I stated was that we were looking at a currency war. And it was after the Silver Summit last year that we spoke, and what we saw was a oil price decimation, which took the ruble down substantially. And as an aside note, it was the first time I met Bull Pony. He was speaker actually just before me at the Silver Summit, again a year ago, and he had predicted that you would see this huge influx of price appreciation in the metals before the end of the year. I didn't agree with that, but what was interesting, if you looked at the gold price in terms of rubles, it did almost identically with what he had predicted. And I found that to be rather interesting. Coming back on point, yes, we've gone from basically a financial currency war into the potential of a shooting war. We don't really want a currency war, but it's inevitable with today's financial system that everyone is going to compete to get a competitive advantage on their exports, and this is why that people have a financial survival instinct. In other words, if I cheapen my currency, it helps me to export. That's the thinking. It's not all that valid, although it works in the short term. Basically, it's a race to the bottom, as Jim Dines talks about, who can have the cheapest currency the fastest. It's the beg thy neighbor strategy that took place in the Smoot-Hartley Act in the 1930s. We know from history and experience it doesn't work, but yet it prevails again today. Moving on, what I want to say is this shooting war is something that it's not funny, it's not a joke, it's something we need to take very serious, and it looks like it's escalating, and quite frankly, on a personal basis, it's rather scary.
Well, I completely agree with you. It's extremely serious when these things happened. And bringing it back to currency and precious metals and metals like silver, is this the sort of driver that could potentially affect the metals market in a dramatic way? Of course, we'd like to see a steady growth without any spikes, but a spike related to a possible shooting war, which in fact is actually going on right now, that sort of sustainable spike is the kind of driver potentially that would really affect our currency in a negative way, drive oil prices up, drive silver and gold up, and then spark the sector in a way that's, as you said, not funny and not fun, but can be profitable. Can I use that word?
Yes and no. And I know what I'm saying. If you look at the end of the bull market in 1980, the last driver was Russia moving into Afghanistan, and that war started, and that gave the last oomph to the final phase of the bull market, that last part of that vertical climb. In a bear market, almost any detrimental negative news that should be bullish for gold doesn't move the market. So that's why I say yes and no. In a bull market, any news like that, war, escalating war, new breakout, whatever, will tend to move the market higher. In the doldrums that we're in now, almost any good news is a non-event to the precious metals market. So what we really want to look for is when it's news-driven. In other words, let's say that this took the metals higher all next week, and I want to see more than one day. And there was talk about, metals are higher, and they get analysts on, CNBC and Fox Business or wherever and state, it's the war-driven, that's why. If you started to see that happen, which I really, really doubt, but if that were to occur, then the momentum starts, and then any news that's further out in the future would tend to bolster the price of the metals. It's not going to happen this time. Should it? Yes. Could it? It could, but it won't.
So more possible downside?
Yeah, I think that we're in tax loss selling. So the equities are the most extreme undervalued situation that I think I've ever seen in my lifetime. And then there's been a tendency in the last 3 out of 4 or 5 years for the gold market to sell off to the last tick on the last day of trade, which means since most of the main traders are at home relaxing during the holiday season, the few that remain have an agenda, and that agenda is to get the lowest tick in the gold market so the year-over-year price looks as bad as it possibly can. Am I biased in saying that? No, I'm actually stating the fact. Am I biased in saying that they have that as an agenda? Yes, I am. But the facts are there, and for me, they speak for themselves. So it used to be very easy to get a nice quick trade, position trade in the fourth quarter of every year. The probability was over 80% that you could go long gold the fourth quarter and sell out in early January and pocket a pretty neat profit.
So there's nice opportunity coming up, probably.
No, that seasonality has gone away. In the last 5 years or so, it's been just the opposite. It gets sold off into the last trading day of the year. So that seasonality no longer holds. So I think that's a probability, and because of that fact, Ellis, I'm really thinking that, we'll probably see a new low in the silver market, meaning we probably get below the 14 level. I don't like to say it. It shouldn't stay there long, but it's certainly chance would favor that outcome more than a turnaround here at the Thanksgiving timeframe.
And it's holding at that level right now as we speak.
Yeah, I mean, technically, and I'll put on my technical hat for a minute, I mean, we've bounced off the very low 14 level. Someone caught me during the presentation I did yesterday here at the Silver Summit on my keynote and said, well, David actually traded below 14 and got into 13 in the right intraday. I use on a close-only basis. Most professionals use the OCO close only, or on close only. But I'm not here to split hairs with anybody. I'm just trying to say that the way I look at the market, it's held above the 14 level on a close basis. That doesn't mean that it will. It's done it 3 in a row, which is positive technical action. But again, to repeat, it looks as if with the month of December before us and the way that the metals have sold off, regardless of why, it looks to me like, I'll probably be able to push it down even more, and we'll probably get into the 13s. I mean, Mike Maloney, and Mike and I have been friends for years. He was talking from the main podium about possible $7 silver. I actually disagree with that, but I think his point was all taken. What he says is the paper price could be much lower than it is now, but the retail price would probably remain around the $13, $14 level. And that's pretty true, because what would happen is you wouldn't see any inventory come in the market, so the little bit that did exist would be bid up on a huge spread, meaning the spread between the bid and the ask would be huge, and if you really wanted physical silver, you'd have to pay up for it. And 14 is as good a number as anything. It's the idea, not the exact price. The idea is you could have a paper price that really disconnects from the physical price. We saw that in the financial crisis 2008 when the paper price was around 9 or less and the physical price was about $13.50.
I've been asked since I've been here by people who have not attended this conference, what's the pulse? How are people feeling? How is it attended? What can we take away from this conference that we didn't see in prior years, David? What's the positive spin on this Silver Summit this year?
Well, first of all, just to break away a second or two, I have to thank Cambridge House, Joe Martin, Jay Martin, everybody involved with the Cambridge House for continuing the Silver Summit. They included me in the decision-making process of what I think about San Francisco. I said, fantastic, I was born there, let's do it. I miss Spokane, but it's been in Spokane for so many years. The positive outcome is there's institutional interest in the resource sector again. There's a whole upstairs floor from the main conference area that there's, let's say, quiet talk going on in value plays in the resource sector. So that's a very important subset of, what's going on or what's positive about the conference. On the more retail side, or the main companies here that are at the show, I think everyone here now is a realist. They know that it's a cyclical market, that nothing stays low forever. Everyone that's here is pretty much prepared for the realistic idea that sure we could have lower prices for another 6 months, some have said a year. I don't think it's going to go that long, but they're prepared for it if it does. And they're also prepared for the fact that all markets ebb and flow, go up and down, and we're due for this market to start rising again. So I like the approach. It's not super energetic, but I think it's a good turnout. I think it's relatively positive. And I think that the people are here probably a subset of previous resource conferences, which means they're probably the most knowledgeable about the sector of anybody I've met at any conference, because The people that have stuck it out this far know why they're in this sector, and they know that the time to buy is when prices are low, not high. So the biggest, best thinking and probably the deepest pockets are actually at a conference like this.
Fantastic. And what can we expect to see on the next edition of the Morgan Report, David?
Well, we're going to continue on with the mobile mill because it's in a, not really a state of flux, but there is a restructuring that's taken place and it's pending exchange approval. So we expect that by the next time we are able to update the Morgan Report, that we'll be able to comment on it being approved. And then, of course, we'll have comments on the New Orleans conference, where I was a keynote speaker, and the San Francisco Silver Summit. And we'll be doing 2 mining updates, company updates that we do almost every month. And, of course, the global outlook. I may even delve into what I expect for 2016. I usually do that in the January edition, but I'm thinking actually I might do it because of some of the insights I've gathered from others and what I've studied in the last couple months on this SDR idea. And one thing I'd just like to self-promote a little bit is that we have these cards that we're giving out at the show, and anybody that listens to the Ellis Martin Report can get on our free email list at TheMorganReport.com/get started. So we put out a paid report for those that are serious in money, metals, and mining. We're way beyond just doing silver. We look at all the resource sector. But if you just want the insights for free, you can get on our free list, which is, again, TheMorganReport.com/get started.
I appreciate you joining me today on the program. Thanks.
My pleasure. Thank you, Ellis.
You can find David Morgan and his opines, as well as those of others, on his website, TheMorganReport.com, where you can become a subscriber. And you can listen to this segment again on the homepage of our website, EllisMartinReport.com. Also downloadable on iTunes.